I never thought I'd say this, but I think it's the financial sector that's going to save the world. They control the flow of money in the form of lending and investment, and they also insure against it. Currently, we're going to need in 15 years $90 trillion to keep up with our Sustainable Development Goal targets. At the moment, last year, 130 banks with a value of $47 trillion come together to create the Responsible Banking Protocol, which is a statement that's in support of the Sustainable Development Goals. But what is sustainable finance? Sustainable finance is any financial service, including banking, accounting, investment, and insurance, that uses environmental, social, and governance considerations to make its policies and decisions. Currently, there is 3 different levels of sustainable finance. Sustainable finance 1.0 is business as usual. It's what we have now, just with a do no harm policy on it. So their model consists of profits first, then with social and environmental considerations. Sustainable finance 2.0 is where we move from a shareholder to a stakeholder consideration within a company. Their business model is geared towards their profile being total value consideration that is made up of the profits, the social and the environmental components. This is where the ESG market really comes into play, not just in the assets and the investments that they make, but also within their own company, their employees, their suppliers. They consider when they're making an investment into an area, they're considering the community that they're going into and the region. This is also the level that financial entities will actually advise their clients on their policies. If they are an insurance company or even an investor that are looking at an asset that is very close to a World Heritage Site or has really unstable political situation in the area, they are able to advise their clients on the risks that are involved, particularly even on reputational risks, including on the financial entity, which is a move forward. So then we move into Sustainable Finance 3.0. This is where we move to a model that puts the social and the environmental aspects before the profit. So I'll let that sink in. We have multi-billion-dollar companies that are trading competitively in the market, putting social and environmental awareness first and good governance policies before profits. So the way this model works is by first having very good communication with your shareholders as number one. You have to really communicate the fact that you are for long-term value creation, not for short-term profits. How this works is you take a larger and longer-term view of how you invest your money. So if you were an insurance company, you have the unique ability to not just gain revenue from insuring the risk of a project or an asset or a business model, you can also invest in it. So if an insurance company decided that a green infrastructure project that piped water to a more remote community that was affected by climate change, they had great potential if they had the resources to continue in primary industry, growing our crops, supplying food to a large area. You could get behind, not just invest, but you could also support through insurance policies and protect on risk the proposed development. That might not return a good quarterly or 6-month return for your shareholders in the company, but if they have an understanding of the future goals of the entity, they would understand that by rejuvenating a region and providing this green infrastructure, they're actually providing further markets for themselves. So you could imagine the reputation that an insurance company would be able to leverage by providing a supply of water, renewable energy into a remote location that was building the town's assets, building an agricultural sector, helping with logistics, maybe road infrastructure, and being able to create a market that they could then reinvest into, more assets, a larger market for them to insure against. So these are long-term views on how to build, and this is really the fundamental behind the United Nations Sustainable Development Goals. When they created that framework, it was so that we could get investment to places that needed investment. That wasn't a short-term fix, because short-term fix is going to get us into a lot of problems. So when it comes to what we can do, you have to remember that your wallet and your dollar is your vote for the change that you want to see in the world. So you need to ask yourself, who are you banking with? Who do they lend to? And what sectors are they involved with? Who's your superannuation with? Where do they invest in? And who are you using as insurers? Anyone that's in a sustainable market are not quiet about it. They're very easy to find. They're very transparent, and transparency is something that's really important. It's one of the main principles of a sustainable movement: full transparency of where the money's going and what it's doing, and the reportability behind it. All that's available content. So sustainable finance is our key to driving investment towards the infrastructure that we need for a sustainable future.